This is Mortgage Planner Mark Avario. Thank you for funding. I want to thank you for watching this short video. Uh, the introduction, of course, talks about income. That's the number one challenge. Specifically, income needed to qualify. That we live in a world now of financing where everybody must qualify with their tax returns, their pay stubs, their W-2s. It goes to an underwriter. Your income is calculated, and based on that income and your debt structure, how much of a home you can afford to buy. And as a consequence, it's that challenge is leading to price reductions and people not being able to buy what they want to buy and all the things that were mentioned in the introduction. And let me use this home that I found here on the website truwilla.com, a very popular website of a home here in San Diego County. Now I don't want to pick on this home. I don't know what the story is of all the details, but here's what we have as a sales price of 352,900. But what we also see here is that there's been a price reduction of $17,000. That's 5%. Now, as I say, I don't know what the rationale, the reasons, all the story behind it, but of course we know that that's not the desired outcome, is to have to do a price reduction. So continuing to use this example of this particular house, let's extend our analogy out further. Um, it's very important, as you can see, if you're trying to sell the house, to have a financial strategy wrapped around it to show people how they can afford to buy your home. And if you're a buyer of a property, or excuse me, if you're looking to buy a property, it's also important to know a strategy in which you can afford that property as well. And what's too often happens is the approach is misdirected and as a consequence not effective. Here is this property again, the sales price before the price reduction that we had. It was $369,900. Now, for example, let's say you're buying this home on an FHA with a 3.5% down payment, and your income to qualify was $65,000 a year. So if that's all the income you have, $65,000 a year. Now, at a rate of 4.875 on a 30-year fixed FHA, your payment with the taxes and insurance is right around there for an estimate, and the income needed to qualify is $68,220. You don't qualify for that home. Now, what often happens is, as I say, the approach gets misdirected. There is in this case, a price reduction. Let's say a price reduction was well, in this case, there was a price reduction, but let's say it was for you, so you could qualify for this home, or to attract people in the $65,000 uh, income bracket. That would drop the sales price down to $352,900, as we saw that this place had been. Still a 3.5% down FHA loan. Now your loan amount is this. This is just a little below, just a little above 340. Again, it's 30-year fixed. The rate remains the same. Your payment goes down a little bit, actually, at $86, excuse me, $86 a month. But your income needed to qualify is $66,000. Now, that's pretty darn close, but it's not $65,000, is it, of course? And that's with a price reduction of $17,000. That's a lot if you're selling it, and certainly if you're looking to buy it, you can't count on a 5% price reduction in most cases to get into a particular property. But look at the effect if we take not a full $17,000, but $7,000 and have the seller contribute and target those dollars not to not to lowering the price, but to a targeted rate reduction, lowering the rate from 4.875 to this 4.375. And look what the effect that has on our transaction. This buying down the rate to 4.375. Obviously, the sales price remains the same because we're targeted in on the rate. Again, a 3.5% down payment on an FHA loan, bringing the loan amount remains the same as in the traditional example, 30-year fixed. The monthly savings is $106, but the payment is $21.67. But the effect on income need to qualify is $64,916, obviously below our 60 $5,000 annually. You're able to buy this home. You're able to buy this home not with a $17,000. You don't need a $17,000 reduction to do so. You need $7,000. This is a concept that I call the seller buy down strategy. It's not a particularly innovative or new idea, but it's one that has come full circle to address the challenges of income that we have in this marketplace, this credit environment. And as you can see, it allows you to do more with less. Allows you to do more with less. And of course, it's a strategy that, because income to qualify is an issue at all price ranges, this is a strategy that works at all sales price and price ranges. And this particular flyer can be modified to demonstrate a financing strategy around any particular property, or it can be modified to show a particular buyer, a potential buyer, how they can effectively buy and negotiate the property that they may be interested in. So I hope you found this information helpful. Thank you for watching this video. My contact information is here. Phone number 866-509-0587.